going on, y'all? Just wanted to talk about this simple way you could have capitalized on today's market movements, and also how I framework every day. Like when I come to my chart, 8 o'clock in the morning, I just set it up one way in a sense. Like I'm looking for certain areas that price is drawn to, like areas that there's rest in liquidity. Right, so just to start it, I'm looking for 930. I'm gonna put a vertical line at 930. And I'm also going to put a vertical line at 8 o'clock and one at 3 o'clock. All right. I'm not going to make this too long. Just want to show you simplicity, its structure, and its time frame alignment for me. Also one vertical line at 10 o'clock, just to show you that manipulation that happens between 9:30 to 10 and why you just don't take a trade at 9:30 open just because there is a target for the most part, but it doesn't mean just take the trade, right? But either way, coming into my first vertical line, which is 3 in the morning, I'm just looking for, from this vertical line to this vertical line, which is 8 o'clock, I'm looking for the lowest point that the market has been, right? So that shows me that London session has went this low down, right? So I'm looking to see what's going on, like, so I would label this London's low, right? And coming into the highs, in between these two lines, we have London high right here at 7:50 in the morning. Right, just so I can understand what price is doing and where price is at, right? So it's just a simple, I would have been somewhere around here right now, like 8 o'clock in the morning, setting this up, right? So I want to take trades 9:30, 10 o'clock, around that window. But like I said, just showing you how I think about it. Another level that I do like to mark off is the 8 o'clock high and the 8 o'clock low. For that being, that's a 1 hour candlestick also, and we could potentially sweep a high and reverse back down to sweep lows, right? So I'll label this 8 o'clock high, 8 a.m.'s high. And yes, I do this every day. It's the same framework every day. It never really changes. And I'm also aligning it with structure. Like we have a low, a high, we break structure, right? So this was the first sign that structure broke. Even if I wanted to go as deep as this, maybe it's just like a 15-minute structure, right? So we have a low, straight to a high. Like I said, like it's just a higher time frame structure. But let's go off of this one, low to this high. Then we eventually broke this low, right? That's the key to it. I want structure to break this area before looking for trades, just to keep the structure intact, because if this was my last low, these two areas, this is the high, right? And instead of using the wick, I'm just using the body, right? So this is where I will want to see my change in state of delivery or my break of structure. Whatever you use really doesn't really matter. I just want to see the principles align, right? And as you can see, coming into 9 o'clock or 9:30 this morning, I'll erase that level. We did break that area, right? So overall, I don't want to see price break above this high, right? And I'm using a middle line on this rectangle just to show like some form of lower high, right? Like when you think about it, like if I don't want to see price break back above this rectangle, which would show that we're creating higher highs, this midpoint of this rectangle is a good area to start looking for your entries, right? But I'm still waiting for structure to break, right? No rushing the trade, so on and so forth. But as structure does break right here on this body, right there, I go to a lower time frame and I use the same concept, right? I go to the 5-minute or I will go to the 1 minute. Same concept. I see prices rejecting this area. Like I said, this would have been a nice entry in, but we're still within a time frame that I'm not looking for my trades as yet. And we already swept London low, like right here on the open. So there's no real drawn liquidity right down there at this point, at this moment. And there's also no real equal highs as yet either. So there's nothing really happening, right? You got to understand how a market moves. But price held this level, showing that it doesn't want to go any lower, right? Going to the 1 minute. Now I'm getting like, okay, I'm going to start looking for a trade setup, right? And on the 1 minute, I notice the same thing, right? We created structure. We have structure here. High, low, higher, high. Then we broke structure to the downside, right? But since we're on the 1 minute, all of this is minor, right? We broke structure, so we're making lower highs, lower lows, lower highs, lower lows. But overall, there's no real target as yet, right? It doesn't, like, this is chop compared to the actual move. But of course, you can't trade it. Why? Because it broke structure right here. So it's going to make a lower high, and if you have a visual lower high, you should get a lower low, right? So on and so forth. But it doesn't mean there's no real target for this. But I'll keep going, right? As price gave me this structure, right? We broke all the way down, giving me this low, back to this lower high. I was interested in this area because I'm saying to myself, what are the chances that we do not break back above that level, right? And this becomes to be my lower high, and I could potentially take this lower high all the way to a lower low, right? So this high is higher than this high. This high is lower than that high. So this is already setting up for a good sell down. When you think about it, like, why is this high not breaking above this high if the real structure remains? We broke these lows. We need a lower high. This lower high should have delivered lower, but it stalled, right? 10 o'clock comes in, we go higher to go lower, right? That's the concept of the candle. We opened high, low, close, right? So me thinking this way, the same thing. Again, if this is my last area that I don't want to see break above this structure, I put a rectangle at this high and say, hey, what are the chances that price can hold under this 50% level of this rectangle? Because either way you put it, right, I don't want to see price break this high at this point, nor this high, because I'm trying to framework a trade, right? I don't want to see price go higher if I want price to go lower. That's for one. I'm not just like, oh, let me just enter. I'm being strategic with it, and that's what I want you guys to be. But you have your 50% level. Let's say you had entered off of this 50% level. Your stop loss can go above this high because that's the actual high that we don't want to see price break above regardless. This would be a good level of invalidation. Also, you can use the major high, which would be your swing high, swing low, swing high. Like, we don't want to see price break above this level also, right? But we already have a lower high than that high. So we don't want to see price break above this, because once that happens, we should push higher. So it's all preference. You can use this high, just depending on how much you're risking on the trade, right? But for me, I'll be using this high because realistically, I don't want to see price break above this high anyway, right? This is giving you a 4.50 stop loss. So let's say just a 5-point trade setup that you can lose a trade, right? And if you miss this entry, you can get one as we're breaking this low, right? We broke this low. We also have like a few principles, nothing major, but we're breaking this FEG to the downside. Boom. So we inverted that, or we inversed it, so on and so forth, right? Now, when it comes to targeting, you could have targeted right back down to this low if you chose to, or if you're looking at the bigger picture of things, like I said, high right here to a lower low, right? So you can target this low, but if you following structure, this high is still holding under this low after breaking structure. So we should technically create a new low, if that makes sense, right? And this is how you're supposed to be able to think. And even if you targeted this low, not knowing exactly where the lower low would be, I also bring in this tool, right? that gives me its projected targets. I use projection target. It'll look just like this, like these levels, right? If you didn't know where to target, I normally would target at least a 2 standard deviation level, and all of these levels, I trust them, so you can see how it held off of all of these levels. Let's say, I think we got to a 3.5, right? So I'm gonna just put a 3.5 on. I'll give it 3.5, right? But just for easy sake, let's say he was targeting back London's low. You can see how this trade played out. Risk gain, little to nothing, right? This is what we want to do, risk little to nothing. Played out very nice, and price dumped all the way down to the 3.5 because I watched this trade from earlier. And you can see how price held off of that level and started to reverse back off of this level, right? So if you don't know where to target, yes, you could use your projection tool to see what's going on, or look at the bigger picture and just already anticipate, like, structure should give you a lower low, like you already broke, so on and so forth, right? This is just the easy way to look at your everyday 10 o'clock in the morning, 9:30, 8 o'clock in the morning, 3 o'clock in the morning. You want to see what levels are being swept, what levels are being held, where are your equal highs, equal lows, and just keep it simple. Trading shouldn't be overcomplicated, and you don't want to just guess. Like, that's what makes it gambling, right? So I hope y'all stay blessed, and I hope this video helps anyone that doesn't really have a good framework, right? It's a little more to that one, but if you're interested, just join the Discord. I do give free education in the Discord, and we go from there, man. But I hope y'all stay blessed.